Robinhood is all the rage right now, but is it really a good trading app? I break it down in this video. If you're new to the channel, I'm Nikki, a certified financial planner, and my goal is to help you crush your financial goals. So subscribe so that you don't miss future videos. All right. If you don't know what Robinhood is, it's a broker that allows you to buy and sell stocks and options. Many people use it to do short-term stock market trading, and it's known to be used by newbies to the market. Robinhood pioneered the movement towards commission-free trading, and now most major brokerages have nixed their trading minimums and trading commissions. Thanks, Robinhood. We are forever grateful. During the market volatility of 2020 due to the pandemic, Robinhood saw a massive uptick in accounts being opened. Retail investors were piling into the markets, and they were using Robinhood predominantly as their broker and platform of choice. But how does the app actually stack up against other online brokers? I've been trading and investing myself for over a decade, and I've used just about every type of trading platform out there. So I'm going to tell you what I think of the app as an experienced trader and who I think it might be good or bad for. Let's talk some pros of Robinhood. It's easy, like really easy to set up an account and start trading and investing in stocks. This is great because to many retail investors, the idea of figuring out what a broker is, which one is the best, and how to go about opening an account can be an overwhelming experience. Then when you actually get accounts opened, you have to go into the brokerage account and you are lost on what to actually do next and navigating their platform. Well, Robinhood created a very simple and user-friendly interface that even a boomer could figure out. They've even been able to make trading options easier to understand for people by literally asking them, what direction do you think the stock is going to go and when? Now, that certainly doesn't mean people don't still mess up. They do. Options are very complex instruments and they can cause a lot of pain if you don't know what you're really doing. But like I mentioned, their interface definitely makes you feel like you know what you're doing with how user-friendly it is. And here is actually what an options screen looks like so you can see the simplicity of it. So with all of that said, the user-friendliness of it is certainly a big pro. Some other pros? Obviously no trading commissions and no minimums to open an account. But now, most major brokerages offer this as well, so they're kind of losing a bit of their edge there. Now, here's my first con for Robinhood. During the market panic in March of 2020, the volatility and trading rush was so great that it actually crashed the Robinhood trading platform. Well, that's not good. Do brokers have issues from time to time? They certainly do, but it shouldn't happen that often, and when it does happen, it should get fixed quickly. It was reported that Robinhood's outages were pretty lengthy during the bout of volatility that we had in March. One being 17 hours long, apparently. I did some digging to really figure out how big of an issue this is, because like I said, things happen across all brokerage firms from time to time. I went to the Down Detector website to peek at some data comparing Fidelity to Robinhood. I found that Fidelity in the past 24 hours from when I checked had some complaints, but not many. Most problems reported were with logins to the website. Now, here is Robinhood's report in the last 24 hours. You can see that Robinhood has way more issues than Fidelity just in the past 24 hours. And their issues seem to be server and login issues. Fidelity has 3 times the users as Robinhood. So Robinhood is having many more issues with a smaller user base in comparison. So I took it a step further and I looked at the Down Detector log from March 2020 when we had all of that fun market volatility. Robinhood had 21 reported outages showing for the month. Fidelity had 3. Charles Schwab had 2. So from the little bit of research that I did and looking at other volatile months, it does appear Robinhood has more outage issues than its counterparts. But to be fair, it's a newer app in comparison and simply isn't as mature as a company. I actually remember in March being glad that I only owned one stock in the Robinhood app that I wasn't touching, so I didn't have to deal with the outages or worry about it. But many new traders got shut out at the worst possible time, multiple times. Robinhood apologized and offered compensation on a case-by-case basis for users, but it was a huge red flag to me in regards to how trustworthy their technology actually is. Even though this was probably a wake-up call for them to improve their systems, I already had doubts about Robinhood's sophistication, and this has definitely left me with a bad taste in my mouth. So let's move to some other issues in my opinion. Keep in mind, I know many people who use Robinhood are loyal to the brand and they love it. So I'm not trying to pee in your cornflakes. I just want to give you the issues from my perspective. Just last night, people with margin accounts with Robinhood got put on notice about margin requirements and the implications of not meeting these requirements. Side note, trading on margin means you're trading with money that you borrow from your broker. So you can lose more money than what you put into your account if you're not careful. So back to the margin story. Just last night, Robinhood margin account holders got a nice notice that margin requirements might be increasing on certain stocks. And if you owned any of these stocks, you needed to prepare yourself and potentially add money to your account by the next day. Wow, thanks for the very advanced notice, Robinhood. A maintenance margin requirement is an amount of money or equity that you have to have in your account at all times. It needs to be your money. It's usually a certain percentage of the total equity position that has to be your own funds. And as stock prices change, margin requirements sometimes change, and you may have to add more money to your account to meet the broker's requirements. It was reported by users who got the email that it didn't tell you which stocks these increased margin requirements would apply to. And if you didn't get this email in time and you owned one of these stocks, literally the next day you were at risk of Robinhood selling some or all of your position to meet their margin requirement. And even then, you may be in the red, owing Robinhood some more dough. By the way, if you are trading on margin and don't understand what a margin requirement or what a margin call is, I highly suggest you go watch a video about it after this video. It's not uncommon for brokers to change margin requirements for certain stocks. That's not the issue here. The issue is the lack of advance notice given to these traders. And speaking about margin and technology, many people also heard about the extremely unfortunate story of a young 20-year-old who took his own life because he thought he had a negative $730,000 balance and that he owed Robinhood that money due to a trade he took on margin. But apparently this young man didn't actually owe Robinhood $730,000, and it was a glitch in Robinhood's system with options trade settlement. The point here being, Robinhood should have this stuff down, and their system shouldn't be scaring the living crap out of people. They should also be giving enough warning to their customers for margin changes so that people don't get caught off guard and have to lock in losses or lose their entire position. It's just the right thing to do, in my opinion. Now, with all of that said, I expect them to make improvements, but I don't have as much trust in Robinhood as I do with big brokerage firms like Charles Schwab or Fidelity. Another issue that I have with Robinhood is, quite frankly, I don't really like their app layout. In my experience, which is obviously based on other trading platforms that I've used, it's not super convenient to navigate your open orders and the profit loss of each position that you're in. You have to search the actual stock to find the profit loss in there. I want a clear, aggregated list in one place of positions I'm in, what my cost basis is, and what my profit and loss is. Easy access. Maybe I'm just bougie, and maybe I've just been tainted from using more sophisticated software, but the app layout doesn't impress me, and I think they have room for improvement there. Some clear downsides with Robinhood for me as well would be the fact that they don't offer retirement accounts, and they also don't offer dividend reinvestment capabilities. Let's touch on each. I think having retirement account options is an important consideration. One, it helps you keep your money in and compounding over time because retirement accounts are tax deferred. So instead of pulling out money to pay taxes on your gains, it stays in and it continues to grow. And ideally, you want to maximize contributions to tax deferred accounts before you invest in taxable accounts. But many people don't do that. If you want to trade and invest for income that you can access now, that's fine. But I encourage people to consider their goals and invest as strategically and tax efficiently as possible. Robinhood is essentially encouraging newbies to invest, but they actually may not be investing in the best type of account for them. Okay, so what's my beef with Robinhood not having dividend reinvestment capabilities? Well, you want to make investing and compounding as effortless and automated as possible. Plus, this is a brokerage firm. I think it's an important service to offer for a brokerage firm. I have had to manually go in and reinvest my dividends, and although it's not a huge deal, I may not get to it in time, or I may forget, or whatever. And I want as much automation as possible. Okay, so another thing that I've heard some professionals complain about with Robinhood is the fills that you actually get, meaning the price that you get when you buy a stock or you put in an options trade. So what I'm doing is we're here at my desk, and I wanted to actually do a test order to see what happens, what my fill looks like, if it's a good fill, if they get me a better price than what I anticipated. And basically what I have here is this is my trading platform that is directly connected to the exchanges. So this is considered a direct access broker, where essentially I'm getting direct access to the New York Stock Exchange and the NASDAQ, and I'm able to, boom, place an order directly into the exchange. With something like Robinhood, it's called a third-party broker. So basically what they're doing is they are not actually connected to the exchanges. They're routing the orders to somebody to then place the order for you. So it's not the same as being directly connected like I am with my professional platform. So I kind of just wanted to compare and see what happens, because I can see exactly what the bid and the ask is in real time on my directly connected platform, and I can also see where trades are firing off in comparison to the bid and the ask. And the bid is basically where what somebody wants to pay for the stock, and the ask is what somebody is asking for. So the bid and the ask may not be very close. Sometimes the bid and the ask have what's called a spread in between, where the bid may be $16 a share, the ask may be $16.10, and there's a 10-cent spread in between. So the bid and the ask is kind of far off. Sometimes that doesn't happen, and the bid may be $16 and the ask may be $16.01, and it may be really tight and close. So it just depends on the type of stock that you're trading. But let's go ahead and dive into what happens when I place an order and what kind of order fill that I actually get. Okay, so I have my Robinhood app open, and I'm actually going to buy some shares of Switchback Energy. I'm going to do a limit order and I'm going to do a market order and just kind of see what happens. Switchback Energy is, I'm not saying you should buy this stock at all, but I'm choosing it because it's got momentum right now, it's moving, and there's actually a spread between the bid and the ask. If I go to my direct access broker, I can see that the bid right now is $16.08 and the ask is $16.11. So there's a 3-cent spread. So I just want to kind of see what Robinhood gives me. So when you go to hit trade on Robinhood, it's going to basically ask you, do you want to buy or do you want to trade options? So I actually have a friend, the Stock Geek is his name on YouTube. He's more experienced with options, so I'm going to share what he told me about options fills. But for this case, I'm just going to buy the actual stock. So I'm going to click buy. So this is the market order, so it should fill me at the market at the time, which is going to be, right now the market would be filling me at 16.12. So I'm going to swipe up. Should be close to 16.12. Okay, it got me in at 16.10. So it actually got me a better price than the ask. So that's good. Okay, so now let's try a limit order. And just so you can see, it got me in at 16.10. But the ask was at 16.12 at the time, because this is real time. Okay, so now what I'm going to do is I'm going to do another share, but I'm going to do a limit order, and I just want to see how that goes. So I'm going to click buy, but you have to actually choose limit order. It's going to automatically be a market order if you don't do anything. So if you have to click shares, and then you have to choose a limit order, and you have to place what you want the price to be. So right now I see that there's, well, the spread just keeps decreasing. So that's not what I wanted to see in this example. I wanted to see a wider spread. So I may just wait a second. Okay, there's a little bit of a wider spread. So 16.08 is the bid, 1611 is the ask. I'm going to place it at 1610. Okay, it got me at 1610. Okay, so that's good. So the order execution was pretty good. I got good fills, so I'm pretty happy with that. Now, as far as options trading goes, back to my friend, the stock geek, he actually ran a hedge fund for years, and he is a professional investor. He's very experienced with options, and here is exactly what he told me about his experience with trading options with Robinhood. He basically said that he almost never gets filled at anything but the ask price, whereas with his direct access broker, Interactive Brokers, or even Fidelity, he can get filled with a better fill near the mid between the bid and the ask. So basically, with options, he has seen some variance there and not necessarily getting the best fills with options trades. And he also said that he's had situations where his spread order price was higher than the market ask price, and he still didn't get filled. So he was trying to get it filled above the ask, and it still wasn't filling him. So, options are very complicated, and any of you that are trading options, maybe you've had a different experience, but he's pretty experienced with this stuff, and he's basically, this is what he told me, so I just wanted to share it with you guys. So if you are thinking about trading options with Robinhood, think about that, and think about maybe you might want to go with something that is a little bit more sophisticated so that you can get really good fills. And he said the same thing that I said. Basically, maybe we're just biased because we're used to using other platforms that have been around for a really long time and have a really good reputation. So maybe we're just biased, maybe we're just bougie, but this is just our experience. That's what I mainly wanted to share with you guys about Robinhood and what my overall thoughts are on the broker. So now we come to the final call. Do I recommend Robinhood? Who is it for and who is it not for? Well, in my very biased opinion, I don't fully trust Robinhood yet, and I think going with a major broker like Charles Schwab, Fidelity, TD Ameritrade, or E-Trade is in your better interest, and they'll give you more features and service. But I do very much like the simplicity of Robinhood for beginner investors. It's a stepping stone for newbies, and I think Robinhood has done an amazing job at making this stuff easier to navigate and getting more people investing. They also have some good learning resources and explanations within the app that could be handy for new investors. If you're wanting to be a more active trader and investor, eventually as you gain more experience, Robinhood does not cut the cheese anymore. It's just too simple, and it doesn't offer enough within its app right now. If you're a newbie who's just trying to own some stocks and get your feet wet, Robinhood works great for this. Just be aware of some of the limitations and issues that it has seen in the past. Not only that, realize that you're investing in a taxable account, which actually may not be the best option depending on your goals and financial situation. So in a nutshell, I don't fully trust them. I think you'd be better off with a well-established, larger broker, but I don't hate them either. It's great for new investors to get their feet wet, and with the right moves made by the Robinhood team, they could really make improvements to become a better broker overall. And speaking of goals and financial situations, if this video has made you feel like you need a bit more help and guidance to figure out your money life and how you should be investing, check out my Finance Family community, where I have training programs and classes to help you get on the right money track. All right, Finance Fam, that's all I have for you today. I hope you found this helpful, and I hope you are enlightened. Don't forget to subscribe so that you don't miss future videos, and I'll see you next time.